Brutal day on January the 29th to finish the month. Portfolios had a strong start. Last 5 or 6 days have been just brutal. You see some good trades though. A few good trades. Most of it was difficult. Plus 1287.50 on Cobra 3, even S&P. Adaptive moving average minus 25.25. 60-minute breakout short was up plus 350 on the day. And AT 2019, even S&P, some good shorts this week, plus 1775 on that trade. Those were the base strategies on the ES. NQ is a bit more choppy. Cobra 3 NQ, the non-profit target version, minus 625, just stopped out that swing high. Otherwise, it would have been a good trade. Gap continuation 2019, minus 650. Just these, the market just seems to come back and hit our stop and then continue. Today is one of those days where see the short, it definitely ends up down, but it rallies back, hits that stop. As soon as it hits that stop, boom, rallies back, hits that stop. Talking about the GameStop and Robinhood, we've known that some brokers sell order flow, and so you start to wonder how that affects your strategy over time. When you see scenarios where you're just stopped out at turning points frequently, minus 1025, just overall just volatile. So that does make a difference, that level of volatility in the markets and ranges. Let's see here. Part of the issue also is that it's hard to have a smooth downtrend. If there's a smooth uptrend, you can trade it, but at any time lately when the market starts to go down, it's extremely choppy. It's just wild price action whenever there's a down market, as the dip buyers face the sellers. So minus 625 on tick pulses is not a strategy we're trading, but it's in the workspace here. AT 2020 minus 725. Just these, anything less than about a $2,000 stop loss on a momentum-based strategy seems rather small right now. Minus 35.55. Tough day on VSD. Keep trying to buy it, and it kept rolling over on us after yesterday afternoon. Gap continuation 2019 was up really big, up 3,500. Here, end of the day, minus 935. EVP2 gold plus 1175. That was a highlight on the day. And Viper plus 600 on the day. Dynamic tick pullback minus 600. EVP1 minus 455. Beta 2021C minus 550 on gap continuation reverse. Tick wave minus 825 in ES and NQ. VSD ES minus 3487.50. Getting crushed on those long trades. Cobra crude minus 725, aggressive and conservative. And natural gas, no trades. RBOB, no trades. Euro minus 68.75. Soybeans, no trades on the day. Choppy wheat. Gold, we had Cobra gold stopped out on the day, minus 625. And silver, no trades on the day. Exhaust and reverse, no trades on ES, but pretty good day on exhaust and reverse silver. So silver was a highlight. Let's take a look at that. So silver, this is the one strategy that made an equity peak today. This new exhaust and reverse silver strategy that we've released. So one small highlight on a very challenging day. As we gave a lot back on the portfolios, we had a great Wednesday a week ago was really nice. Some really good feedback on some gains, and then we just really had some challenging trades since then. Reminds me of Q4, and this chop has been extreme. So the profit target version plus 575 on Cobra 3, the profit target version on Cobra 3 and Q was stopped out at that high point too. So let's look at the portfolio calculator for the trades. All strategy access, the 78, up only 7,900 on the month, and it is in a $44,000 drawdown. It was in a bigger drawdown when we started the month. Started to come back, looked like we'd spike back towards equity peaks, and The Q4 chop came back right here the last 5 or 6 days. All strategy access short list up 1,500 on the month. So yeah, the chop got this strategy too. Did make an equity peak this month and was up, and then we just haven't had anything where we're pegging away at equity peaks. So you see these solid blue lines right here. When you hit those equity peaks and stay there for a while, we haven't had that in a while. So it's been challenging. We come back, hit equity peaks, and then go into a drawdown. So we really need to see some. We really need to see some pegging away at the equity peak, so to speak. 14,000 on the All Strategy Access plus a 7 new, and it is in a 17 out of 22 drawdown. So if you're looking to get in, we always say start on the drawdown, not guaranteed to hold those worst case drawdowns. We had some new worst case drawdowns in Q4 with some of the portfolios. We've worked to revise those right here at this worst case drawdown on the stock index portfolio right here today, just barely. So if you're gonna, it's minus 91.2750 on the month. So it spiked down here before. So if you're gonna start, personally, my biggest mistakes are wanting to start at equity peaks. I love momentum. I love trading momentum strategies, but you know, you still have more power when you start down here. Even if it continues down, you got in at a better entry price, and so you've buffered another worst case drawdown when you start or add, if you have the capital. And when I say if you have the capital, if you have, you know, at least twice that amount up there, minimum capital required to increase your position sizing. 200K portfolio up on the month, 10,624, one of the top performers. 12,000 out of $20,000 drawdown, and you see it's in a normal drawdown. It kind of pegged away at equity peaks right here for a little bit, so it did well. And then we get in a separate video for the 50K portfolio, and it's 97.60 out of 10,157 drawdown. We made a separate video for that, so check for that. We transitioned on the 17th, so if you look at the transitions, if you take the strategy we traded in the first half, compare them to the second half of the month, it's minus 4,600. This is the result for the new setup, minus 5,200 on the month, and the drawdown is right there at the worst case drawdown. So once again, that's the opportunity. And then micro stock index and gold portfolio. This made a couple of new equity peaks this month and then ended down minus 128. So minus 29.45.75 out of a 33.18 drawdown. So let's see. Yeah. So yeah, you can see where the blue lines hit the equity peaks a couple of times. Looked strong. Q4 chop just came back. You see that big day on Wednesday, I guess what was that, the January the 20th, was a big trend in the market. And then since that time, you see choppy, all these choppy days. Mainly you have two very small winners in comparison to the number of losers. 1, 2, 3, 4, 5, 6, 7, 8 trading days. 6 of those are losers and the 2 winners are really low. So overall, pretty much 8 days in a row. And it gave back, 29.45. So pretty much gave these two days were big, 2,600, and then it gave back 2,900. So the net of these is about minus 300 on the last 2 weeks. So pretty extreme. The GameStop news, the concept of SEC regulations, and all the talk about hedge funds. I think added to the volatility, added to the chop this week. Earnings news. We had some earnings news. A strong run into Tuesday, Wednesday time frame, and then just a massive rollover. So here are the results. Portfolio calculator. Upload them to the portfolio calculator website. So those are the results for January. Some of the portfolios are up, some of them are down. Ended on a down note with the chop in the markets. And as always, we look for strength in these markets at the beginning of the month, and we look for cycles in the market. So markets typically cycle from choppy to trendy. Even though we've had more choppy days lately, And I'm looking for, we've had, this is a week, it was a pretty weak start, 14,000 in comparison to some of these others. What does February look like? And say all strategy access 51 plus 7 new. It has had one down month, but still typically pretty strong. March can be pretty strong. April can be pretty strong. So looking for cycle back to good trading, and we'll continue to monitor some of these strategies with the extended volatility.